Let's welcome in Sacchitanand Uttekar also, get technical view from him. Sacchitanand, let's talk about the three stocks that are on our screen right now. ONGC, HPCL as well as MRPL. What do you make of the moves on all three of them and do you see further buying ahead?
Well, good afternoon. Yes, if you look at the entire pack, we have seen a good consolidation for almost 4 months in HPCL, and after this particular consolidation now looks mature. Definitely, if you look at the trend itself, I think HPCL is far more better placed right now for an extended up move. But if you look at ONGC for certain, the stock has been under pressure. There has been a drawdown of more than 20% in last couple of months, and still, if you look at the floor that it has been scaling around 155, has been very stable. So I think from a trading perspective, it really makes sense to look at ONGC from a trading perspective. But as far as the longer term trends are concerned, I think HPCL is still is in a very healthy up move, and we expect this particular up move to continue in HPCL.
Can expect the up move to continue in HPCL. As far as ITC goes, Sacchitanand, what are you watching out for this one? That big crack came in yesterday. Some relief on the counter today. News also a little positive for this one. Do you believe the worst may be over for ITC and bulk of selling is overdone now?
Well, not really. If you look at the longer term trend, we saw a decent breakout somewhere close to around 260 levels, which happened in the month of February. And post that, the stock witnessed a very sharp momentum. If you look at the overall pattern, the pattern indicated a target somewhere close to 360, and this is where we were optimistic on the stock. So we had recommended this particular stock to our clients, and almost from that same level, the stock has now retraced back. So I think for time being, it is taking some support near to its 200-day exponential moving average, which is placed around 270. But I think we may see some further drag in this particular counter, and we may see it again coming back to 265 kind of a zone where it may just start stabilizing. But I think it is more of a time kind of a criticality which is still left. Price wise, I think major part of the correction is done. We may see slight deviation from this particular level, but I think there is some sense of stability which can be expected somewhere close to 265 270 zone, and that will be a good zone wherein one can again start participating in the counter.
Fair point, Sacchitanand. Just hold on to your thoughts. Let's get in a management then. This is the management of Reliance Commercial Finance on their earnings. It's been a good quarter for them. Profit has grown by about 44%. NIMs have risen to about 5.7%. Total disbursements are up. They are also looking at several growth factors going forward from here. Let's welcome in Devang Modi, the ED and CEO at Reliance Commercial Finance, to take us through the highlights of the quarter. Devang, it's been a good quarter for you. Just run us through the highlights. What's worked for you this time around?
Thank you very much, Dipansh. Basically, we had a good quarter. As you know, in our last investor release, we are now a 100% subsidiary of Reliance Capital, versus last year same time we were a division of Reliance Capital. So now we have our own dedicated capital, and we have a mandate to grow the non-bank finance company business. So this was a good quarter, first quarter of standalone entity, and our AUM has grown steadily at 6% for the quarter, and but profits have grown 44%, primarily as we optimize some of the OPEX ratios.
Right. And what's the outlook then going forward from here? Can you expect this run rate on performance to continue? What next for Reliance Commercial Finance?
See, as I told you that we have now mandate to grow the non-bank NBFC business. So we are in phase of creating a roadmap for much accelerated growth for future. And as part of the plan, we will be launching even the consumer businesses and continue to grow in our SME lending, where we have underwriting capabilities developed over a period of last 10 years. So yes, we will. The plan is to continue to grow At the same time, we will be investing in creating some of the strategic capabilities, which will help us maintain the momentum of growth for many years to come.
Fair point, Devang. We'll leave it at that, but good luck to you for the quarters ahead. It's been a good growth, especially for the SME segment. Disbursements are up 27%. That's the management of Reliance Commercial Finance for you. But let's cut across to the management of Mastech. They're talking about their numbers.
0.7 crore for this quarter as against 10.5 crore for the last quarter, which is up 40% quarter on quarter. Year on year, it grew by 539%. In terms of non-financial parameters, we added 12 new logos. So that talks about our continuous sales endeavors across the geographies and various service lines. Our order book, as John alluded, continues to be robust at £41.1 million. We clocked a single-digit annualized attrition, one of the lowest recorded thus far, at 2.4% for the quarter. DSO spiked a bit to 72 days, but that's a function of timing. We are back to mid to low 50s. As of now, and the cash and cash equivalent stood at 150.3 crore versus 153 crore for the last quarter. So as illustrated in the numbers, the financial performance continues to be robust, and I look forward to building on that. So that's it. I'll pass it on to John for his closing comments. John.
So I think it's been a good quarter because we've had loyal customers, as I said, and we've got very talented and committed employees. But we are going to build on those foundations that have made Mastech a great company, and that's our engineering talent and our delivery track record. And those are the assets that our customers respect. Our employees continue to continually improve, and those are the foundations that we'll continue to execute. But it is about execution. This is a very simple business. It's about disciplined execution, and I'm confident we've got the team that will continue to do that. So thank you. Thank you.
Thank you.
Thank you, gentlemen.
That's Mastech for you, and that stock is locked in upper circuit. It's been a stellar quarter for them. Profit up 40%. Sales have been flat. Operationally, there's been an expansion in margins to the tune of almost 2%, 1.8% there. EBITDA has gone up by about 18%. UK profits have in fact dipped slightly. North America profits have also dipped, but it's been a good performance overall for the company, and they expect this strong performance to continue going forward from here as well. That was Mastech for you in trade. We'll connect with the management of Bajaj Finance also in just a bit and get a rundown on their numbers, but it's been a good quarter from them as well, and their AUM only continues to grow going forward from here. Their profits are also up to the tune of about 40%. Sales have gone up by about 38%. Net interest income has gone up almost 50%, and asset quality has been absolutely stable for a Bajaj Finance as well. Let's take a very short break. We'll come back, talk to the management of Bajaj Finance, also welcome in Mr. Chokalingam and see everything that's happening in the markets and get a fundamental picture as well. Welcome back. You're tuned into the trading day. Let's talk about Bajaj Finance. It's been a good quarter for them. Profit has gone up by about 42%. Sales are up 38%. Net interest income is up almost 50% for them. Bring on board Rajiv Jain, the MD at Bajaj Finance, to talk about the quarter gone by and the road ahead. Congratulations, Rajiv. Another good quarter for you. Just talk to us what's worked for you this time around. And can we expect the strong run rate to continue? Because quarter after quarter, there's been a string of good performances from Bajaj Finance.
Thank you, Deep. I think it's been a good quarter for the company. I would accept that. I think overall there was a very strong momentum on top line growth. The company disbursed a record 38 lakh loans, just a tad below 38 lakh loans, 37.7 lakh loans. 60% of them are existing customers who came in to do business with us. Assets under management grew 39%. Total customer franchise is now 22 million customers that we deal with. Loan loss and provisions actually were higher, but included a one-time number of 42 crores that we actually took a hit on. So adjusted for that, profit growth would have actually been stronger. credit quality was very, very stable. On a year-on-year basis, we were, on a 120-day basis, we are absolutely where we were last year. So it's been a pretty good quarter for the company as a result of strong growth momentum backed by prudent risk management in the quarter gone by.
Right. Just to get clarity on the provisioning front, you're saying because of that one-time account of 42 crores, that's why the provisioning has gone up. Is that correct?
Yes. The answer is yes.
And going forward, what's the outlook on asset quality? Likely to remain at these levels only? It's fairly stable. Net NPS is just about 0.5%.
Yes. It's likely to remain very stable.
All right. You added, like you said, a lot of loans were dispersed in this quarter. Could that also be on account of some pre-GST buying in the consumer space?
So out of 38 lakh loans that we did, there was clearly 50 to 70,000 loans only in the last 7-8 days that we saw some degree of surge in, but it's not material. Is it 50, 70,000 loans? The answer is yes, but not material.
All right. And in the breakup of your consumer book, the SME book, commercial book and rural book, where is that strong traction coming from? I see the rural book is up about 132%. What would you ascribe that to? And considering that it's going to be a good monsoon this year, can we expect this kind of traction going forward as well?
So we've been growing distribution. So our presence has really grown on a year-on-year basis. So that's one driver. Two, as we've gained more confidence in managing the business, we are accelerating, but you must remember that the base is very low. Its contribution to the overall balance sheet is only out of 68,000 crores, only 4,000 crores. So it's on a low base, you will continue to see a high growth percentage number, but you should see if the monsoon is good. We are quite excited about the rural business. The credit quality, as we share in investor presentation, the gross NPA on their business is 75 basis points. Net NPA is 21 basis points, just on the rural business. So we are quite excited. It's a well-performing business from a credit standpoint. Base is low. We are expanding distribution. So you should see strong growth momentum there.
Right. And the consumer book, likely to see the same traction going forward from here, or would there be some rationalization?
Yeah, there will be some rationalization, especially in quarter 2 as GST now comes in. This month will be a slower month as things settle down. But if monsoons are good, which is what it's looking like, inflation is at its historic low. I think overall mood in the economy, consumer confidence is high. I think third quarter should be, with GST behind us, with things getting normalized, momentum should be very strong in Q3 is what I would estimate.
Fair point, Rajiv. We'll leave it at that, but good luck for the quarters ahead, and we'll hope to see same performance from Bajaj Finance. The stock, though, off to the highs of the day, but nonetheless 2% of an uptick coming in. Let's welcome in Mr. Chokkalingam as well, get his view on some of the big stories of the day and the big moving stocks. Sacchitanand is also still with us. Mr. Chokkalingam, do you track Bajaj Finance? Just talking to the management, a lot of pre-GST buying in the consumer space has clearly pushed up the performance for this quarter. So maybe some rationalization may come in, but they've had a steady track record of quarter-on-quarter strong growth coming in. Can we expect this to continue?
No, it's a great company, and absolutely you are right. The growth has been phenomenal. But let us remember the fact that what happened to IT industry. When the base gets larger and larger, it's going to be difficult to maintain this kind of profit growth. And valuation also is not cheap. It's already very highly stretched. So therefore, I would advise caution. Only the long-term investors can hold it. In fact, if there is any further significant spurt, one can sell the stock and shift to something like Sundaram Finance, which is still cheaper than Bajaj Finance.
So it's a good performance, but maybe the stock is a little too expensive for the moment. Sundaram Finance may be a better option. Let's focus on two auto ancillary names. Motherson Sumi has shot to the highs of the day, 3% up move coming in on that one. So that's doing well in trade right now. Pull up a GNA Axles earnings reaction on this one. Over a 6% up move coming in on that counter right now. Sacchitanand, on both these stocks, Motherson Sumi and GNA Axles, what's the view?
Well, if you look at Motherson Sumi, in fact, we have seen this momentum again picking up after a long time. especially if you look at the immediate hurdle of around 330. It is the breakout point for this particular up move. So in case if the stock sustains above 330 and if we have a decent closing here, we may see an extended move right up to 355, 360 in the coming days. So definitely I think it is just a matter of time, and if we have a strong closing about 330, we may see an extension of this particular move. So of the lot, I think Motherson Sumi right now on a momentum play looks better.
Motherson Sumi looks better on the momentum play. Mr. Chokalingam, do you track a GNA Axles? It's one of the smaller auto anch names, but a good result from them. A 42 crore jump, 42% jump in profit. Interest costs have gone down. There's a other income component as well.
But sorry, I saw this stock a few months back, but I have not updated myself for March results. I don't know what is a PE, so therefore I am not in a position to answer.
Fair point, Mr. Chokalingam, but the stock is sitting at the highs of the day, 7.5% up move coming in. There was significant inventory destocking seen in this quarter for the company. There's a big increase in their export revenue as well, and that's helped the bottom line too for this company. Let's talk about the two FMCG giants out there, Mr. Chokalingam, ITC and HUL. Good results coming in from HUL, but you've seen a sharp run up in the stock already. That's why it's not reacting too much to those earnings. But what is the expectations from HUL going forward? Can they maintain this performance, and can volume growth also bounce back after the pre-GST inventory destocking that we saw? And ITC, with whatever that's happened on cigarette cess in the last 2 weeks and the kind of reaction that the stock saw yesterday, is the bulk of the selling over? Because it's bounced back today up about 2.2%.
Yeah, first ITC, obviously any stock which falls 13-14%, it has a tendency to bounce back because a lot of traders try to do some bargain buy. But if you remember on the same channel, when GST announced the tax rate for cigarettes, I firmly said that this will be corrected because the government policy, if you observe closely, it is against encouraging liquor and cigarettes. So therefore, I said at that time itself, one should be very cautious. One should not take it for granted. So I continue to maintain that stance. I don't think even after this hike, the government is going to stop, from further increasing the tax on cigarettes. Year after year, I am pretty confident that the duty on cigarettes will keep going up. So coming to ITC back, it is not doing anything great in other segment as well. Whether you take paper or hotel or agri, either the performance is inconsistent over the quarters, or they are not doing great margin in these businesses. So I would ideally sell the stock anything above 300. I would not hold. As far as HUL is concerned, I find it difficult for the company to, maintain this kind of volume growth. I see a massive structural change in the last 10-15 years. In the 15-year time frame, the Indian FMCG companies have grown much bigger, and they are growing faster than HUL, like MNCs collectively. And therefore, I believe it's going to be tough for HUL to maintain this kind of growth.
It'll be tough for HUL to maintain this kind of growth. That's the view coming in on ITC and HUL. ITC, in fact, exit at 300 levels. That's the view from Mr. Chokalingam. Have you seen the pharma stocks today, Mr. Chokalingam? Aurobindo on the back of a US FDA approval. This is a big opportunity for them, generic Renvela, and has a global opportunity of about $2 billion and could add about 5 to 6% to Aurobindo's top line. 5% gain coming in on that stock. And a whole host of other pharma companies also got select nods today. So Cadila, in fact, flashing on the back of your screen. They've got a US FDA nod for one of the injections. You've got Lupin in focus, Sun Pharma as well, and Glenmark, which has inked a pact with another pharma company. June was a good month for pharma, Mr. Chokalingam. Are we likely to see the same in the month of July as well?
Yeah, very interesting. In fact, now the Sensex hit a record high of 32,000. In fact, I have been saying for the last few days that the rally in the Sensex and Nifty would continue for the simple reason that I firmly believe the beaten down stocks in the defensive sectors, something like Lupin, Infosys, they would lead the recovery, and therefore the bull run would continue for another 6 months at least. So therefore, I agree with you. Some of these pharma stocks, this is the time to do bargain buy. But I would prefer Lupin because if you look at the June month quarter formulation sales in the domestic markets, Lupin has grown second fastest. And so the stock is beaten down a lot. So therefore, that would be my top pick. Cadillac, great company, but it has not crashed the way other pharma stocks have come down. So therefore, I would prefer something like a Glenmark And maybe lastly only Aravindo, because for Aravindo still, the receivable figure is giving me a little worry. But otherwise, I would go strongly with Lupin and followed by Glenmark.
Lupin and Glenmark, those are Mr. Chokalingham's favorite. What about you, Sacchitanand? Any favorites for you in the pharma space? Lots of movers and shakers today. The pharma index, in fact, is the top sectoral index as well.
Well, if you look at exactly 1 month back, we were of the opinion that Oro Pharma was looking brilliant for a price target right up to 800. So if you look at the logic behind it, we have seen that since December, the stock had been oscillating within a particular range of around 550 on the lower side and 800 on the higher side. And we sensed an opportunity near to that particular level where we expected a rebound back to the higher end. A similar kind of setup is now seen in Torrent Pharma. So, if you look at, last couple of months, especially since January itself,
All right, a bit of an issue with his feed over there. We'll try and get Sacchitanand back on the line. But Mr. Chokalingham, another interesting stock to look at in the markets today, Jain Irrigation up 5.5%. The Maharashtra government has made drip irrigation compulsory for sugarcane farming in the state. Could that be a big opportunity? There's a Morgan Stanley note also that's come out on Jain Irrigation, and they're very bullish on this stock. What's your view on Jain Irrigation?
I think it's fairly priced. I mean, if you take last 18 months, it has run up a lot. And I think the second successful monsoon is also priced in. And also, if you look at the leveraging, there is now, substantial improvement in the balance sheet as far as the debt is concerned. So I would not rush to buy at this level. In fact, if it runs up another 5%, I would be a seller of the stock.
Right, Sacchitanand is back with us. Sacchitanand, I'll let you continue the point you were making on pharma and also a view on Jain Irrigation. Just on the charts, 5.5% up move in today's trading session.
Well, yes, we were talking about pharma, and as I said, even Torrent Pharma at this particular time is showing a similar kind of a setup that we saw sometime back in Aurobindo Pharma. So if you look at the overall formation since January itself, so the stock has been oscillating within a range of around 1200, 1250 on the lower side, and the higher side of this particular band is somewhere close to 1500, 1600 kind of a zone. So we are expecting a rebound in this particular counter. So I think our favorite would be Torrent Pharma from here on, wherein we expect a move right up to say 1500 or 1600 kind of a levels, and a stop loss can be placed somewhere close to 1250 even for fresh long positions. Coming back to your question on Jain Irrigation, yes, we have seen a good momentum in today's particular session, but I think the most critical point out here is around 115, and once the stock surpasses this particular level of around 115, we may see an extended move right up to 140. So I think the stock is gearing up for momentum, and I think today is the first day wherein we have seen that particular step getting activated. So we expect 115 to act as an immediate resistance, but once this particular resistance is crossed, the trajectory is open right up to 140. So definitely it's a good bet even at this point of time.
Right, back at 9900 on the Nifty. That's the move right now. So in fact, recouping most of the gains that were lost in trade yesterday. Remember, we had gone down by about 0.9% yesterday. We've already recovered most of the lost ground from yesterday's trade. ITC, the bounce back in that is also helping the markets move up. In fact, 2.5% up move coming in on an ITC at the moment. RIL, which lost out yesterday's trade, is up about 0.8%. Bank Nifty seeing gains of about 0.5% right now. Punjab National Bank is the top gainer over there. So that's what's helping the markets move up at the moment. Watching out for those RIL earnings, and we'll just connect with Piyush in a couple of minutes to get more details on what could be expected out of RIL tomorrow. You also have Wipro earnings that are out tomorrow. But Mr. Chokalingam, before we talk of those two, what's happening with cement? Is it more of a buy on rumor, sell on news kind of story? Because we've seen ACC and Ultratech go down in today's trading session after a strong performance yesterday, and it was good results from both of these companies. So really, what's happening with cement stocks right now, and what's the outlook?
Most of the cement stocks are trading on a trailing basis around about 20 PE, which is unprecedented in the history. And at the same time, on the other hand, if you look at the industrial economy, which is struggling for last 2 years, and even the cement sales volumes are growing in a poor single digit. So this is surprising for me that cement stocks are still commanding super rich valuation. So probably there is a lot of hope on the future. But in the short term, what has happened is these companies, despite a poor volume growth, they have been benefited out of the price realization. But the issue is whether they can sustain this kind of price realization. Let us not forget the fact that CCI second time has raised the issue of cartelization and the rise in the prices. So therefore, I would advise caution on the cement pack. I will not rush to buy any of these cement stocks.
Right. Just hold on to your thoughts there, Sacchitanand and Mr. Shokalingam. Let's get in Piyush then to talk about the big one out with its earnings tomorrow. RIL, Piyush, what's the update this time around? Expected to be another decent quarter for them. What's the preview and what are we watching out for as far as key factors are concerned?
So as always, net profit and gross refining margins, GRM, they actually are going to be the key numbers to watch out for. Now this quarter will again actually be a stable quarter. Net profit is expected to actually be higher by 6%. The net profit number is, the consensus estimate is around 8,006 crores. So that is the number actually you should watch out for. Basically any number basically beating more than 2-3% to that number should be taken positively by the street. In terms of sales, again that is expected to go up by 14%, EBITDA basically expected to go up by 5%, margins are expected to moderate slightly. Now if you come to basically what should be the GRM estimate, the consensus is expecting roughly $11 of GRM. Now the reason, and as we know over the last 7 to 8 quarters, the GRM they basically have ranged between $10.4 and $11. So it has been really a good period for the last 2 and 2.5 years for Reliance Industries. Now the factors behind the GRM softening versus the last quarter are actually that Brent crude basically that has actually fallen by 7%. In fact, rupee actually has appreciated in this quarter, and that basically is detrimental because the earnings are actually denominated in dollars. Now in terms of petrol cracks and both diesel cracks, they actually have fallen. Petrol crack basically has fallen by around $0.8 versus the last quarter, and diesel cracks that actually has moderated by around $0.5 per barrel versus the last quarter. So again cracks they basically have softened. The differentials between the light and heavy crude that basically has narrowed down. So together the two actually they have resulted into the GRM softening a bit. But nevertheless, if you look at the Singapore GRMs, that number is roughly around $6.4, unchanged versus the last quarter, which means the analysts they actually are thinking that Reliance perhaps could be actually outperforming the Singapore benchmark by roughly around $4.6 per barrel. So again that basically is heavily dependent on what sort of crude procurement strategy Reliance has followed in this quarter. Coming to again fuel retail margins, this time the diesel retail margin is expected to improve materially, roughly gains to the tune of 20-25% this quarter. So again that should be basically visible in how the retail fuel outlet performance is. Now if we talk in terms of the petchem, and that basically is going to be the highlight this quarter, refining GRMs they are actually expected to go down, which means you need a segment which is going to offset that sort of performance. And petchem margins, look at the polymer margins, those basically are up by 9%, 5%, 6% versus the last quarter for ethylene, propylene and PVC. So again that's going to support. In terms of polyester, again it's a mixed bag because fiber spreads they actually have decreased, but the yarn spreads those have increased. So but overall if you just want to take a headline number, petchem margins are expected to improve materially over the last quarter, and that is one number which you are going to watch for. The next one is oil and gas. Again that's another subdued performance, nothing to write about, but telecom and retail is the one which everybody is going to watch out for. We know that telecom investments they are being capitalized right now, so P&L is not going to be impacted, but what sort of update, what sort of subscribers, how much investment more is coming, are you launching broadband? So a lot of investors are going to ask this question, and if any of this basically is being visible in the presentations, in the details, I think that is going to be something to cheer about. Now lastly basically what we are going to see is what is the ramp up on the ROGC and Petcoke gasifier projects. As we know, these two are the biggest capex intensive projects. If they basically get the company actually says those are online and the commissioning is going to get completed towards the third quarter, then I think that's going to be free cash flow positive news. And lastly, on the retail business, we know that the online platform that has been launched. So what are the plans around the retail store expansion? Are they expanding the large wholesale market? So like what sort of store addition is there? So perhaps those sort of small news is what actually investors are going to watch out for. Overall, a stable quarter, $11 GRM, 8,000 crore profit. And also if petchem is basically expected to outperform, if all these three are basically going to come together, Reliance Industries stock is going to cheer about.
So the core business in itself will do well enough, even if you discount the telecom one. At least that's what you're watching out for on an RL. GRMs of $11 per barrel. Mr. Chokalingam, your estimates on an RL, what would you ascribe this time around? What are you watching out for?
Of course, other than telecom, I'm expecting good results. But the stock has already run up more than 80% from the bottom. And also, I firmly believe that, the oil and gas price is going to remain suppressed. I expect a further crash in the oil prices globally. So that could drag down in the medium to long term. And secondly, even in the telecom space, I continue to believe that the competitive battle which was set off by Jio, it's only a beginning. There will be more and more pressures coming from that segment. So therefore, at this price, I would not rush to, buy the stock.
Sacchitanand, what are you doing with an RIL ahead of its earnings? You saw a dip of 2% in trade yesterday. It's bounced back slightly today. And as Mr. Chokalingam said, a sharp run-up has already happened. Do the charts suggest entering longs at this point, or would you stay away?
See, clearly, if you look at the overall trend, if you look at the quarter-on-quarter performance itself on the price, we have seen that Nifty has gone up by around 4%, and the stock itself has outperformed substantially by almost around, up by around 12%. So clearly, the signs are very strong. The stock has been in a very strong uptrend since it has broken out from the consolidation range somewhere close to 1200 levels. And even since then, we have really not seen any major correction coming in the stock. So if you look at from a broader perspective, we still believe that there's a lot to come in this particular stock. We are expecting levels close to around 1650 on an immediate basis. And if you extend this particular horizon to a couple of years, then probably the stock has the potential to really rally right up to 1900, 1950 kind of levels as well. So overall, it depends on what kind of a trader you are. If you're ready to hold on to this particular stock from a 2 years perspective, I think this is definitely a good level to even enter right now. But if you're talking about purely on a momentum basis, even if you look at if you get a correction close to say 1450, I think that will be a decent level to create some short-term long positions in this particular stock. So overall, we are optimistic on the counter. We expect this particular uptrend to continue even from here on.
Right. Let's get into market closing then, and markets are closing out near the highs of the day, above 9900 more importantly, so regaining most of the lost ground from yesterday's big fall. Pharma clearly had a good day of trade today. So you had an Aurobindo from the large cap universe up 4% at close. Good day of trade for the likes of a DRL, a Sun Pharma, a Lupin and a Cipla as well. Divi's and Glenmark, as also Cadila from the mid cap universe, also having a strong day of trade today. So that's the big move that's come in pharma, and sectorally also it's been pharma that's the top performer as far as the Nifty indices go. Bharti Airtel picked up momentum towards the close of trade, as did Idea. So both of these stocks spiked at close. Bharti Airtel in fact closing out with gains of 3%, Idea gaining almost 6% at close, in fact 9% at close. Apologies there. So big move coming in on an Idea and closing. Hindalco was up 2.5%. Coal India closing out at 3% gains near the highs of the day. ITC also closing near the highs of the day, 2.5% jump coming in after that big fall yesterday. Z Entertainment up 2.5% at close as well. Eicher Motors was up 2%. HCL Tech up about 2%. Kotak Mahindra Bank, Vedanta, Tech Mahindra, TCS, Tata Steel, Power Grid and RIL of course ahead of its earnings, also in positive territory. A handful of losers on the street though, about 7 to 8 stocks on the Nifty. Bad day of trade as far as the cement majors are concerned. So Ultratech, the top loser out there. ACC and Ambuja also in negative zone. Bharti Infratel down about 1.2%. Infosys lost about 0.6%. ICICI, Adani Ports, GAIL, HUL and HDFC were the other losers from the Nifty. Bank Nifty up almost 0.6% at close. Punjab National Bank having a good day of trade, as did a Federal Bank. Watch out for Indian Bank ahead of its earnings, spiked up by about 4% at close. So this one was up in trade today. Keep an eye out on this one going forward. MRPL was up 6.5%, as was HPCL and ONGC. After BTV, I told you exclusively that the government may opt for a subsidiary model as far as HPCL and ONGC deal is concerned versus a merger model between the two. Reliance Com spiking up towards the end of trade, up 4% at close. Nalco was up almost 4% as well. Wockhardt and JSW Energy along with the Cummins and Godrej Industries, Bajaj Finserv and Bajaj Finance also in focus on the back of earnings. As far as some of the other movers and shakers in trade go, you had a GNA Axles that did quite well on the back of earnings impact. as did Motherson Sumi that spiked up quite smartly at close. So good gains coming in for both of those auto ancillary names over there. Future Consumer has been buzzing all day today. Jain Irrigation up about 6.5%. Timken India and GVK Power. Sterlite Technologies up 9% at close. Idea Cellular, like I already mentioned. JMT Auto locked in upper circuit at close as well. KRBL has been buzzing for a while. Another 6% gain coming in on that one. HCL Infosystems, after that big rally of 20% yesterday, lost out a bit in trade today, down about 3%. Aegis Logistics down 3%. Jubilant Food, after a rally, also down about 3%. Greenply Industries, Ahluwalia, McMuffin Corp, Pidilite and City Union Bank were some of your other mid-cap losers in today's trade. Sachit, just to wind down this show then, back above 9,900 on the Nifty. So really, even if you do have a down day, it doesn't go down by that much, and it does show recovery, whether it's within that week or the next trading session. What's the outlook on the Nifty then? Everyone's talking about 10,000. We are back at 9,900 for the moment. Do you feel that we can hit 10,000 in this series itself?
Well, definitely, yes, we are optimistic on that note. We have been conveying this particular fact that 10,000 is something that is likely. In fact, the expected time horizon was a bit, it has been too early. But yes, we were expecting this particular level. If you look at the way this particular expiry started from 94.50 itself, we have seen a strong up move and a couple of days of consolidation, and we are again back on track. So I won't be surprised if we see 10,000 coming up in before this particular expiry ends. So yes, we are optimistic on the market, and if you look at the overall structure, I think the structure has been really in a good shape. Until unless we don't go below 9,600, I think there is nothing to worry about this particular trend. We expect the markets to be in a healthy state, and we expect this particular momentum to continue.
10,000 could be on cards. Watch out for 9,600 as far as a support for the market is concerned. Thanks for joining in, Sacchitanand, and sharing your technical views on the markets today. As we wind up the show and come back with rising stars on the other side, here are comments coming in from the CII Realty Conclave, and you have a whole host of industry as well as government experts out there talking about the affordable housing opportunity, smart cities, infra development, real estate regulation act and much more.